What's going on, guys? How is everybody doing? Crazy. Finally, in a good month, last month, made $92,000. Also made a nice withdrawal. Let me show you on my phone. Here's my withdrawal, $320,000 that I made just recently. And, finally nice, consistent month, better results, better market conditions. And I'm creating another video for you to break down my strategy. Also, I will show you a real-time example on the chart so it's easier for you to understand. All right, let's look at my screen. You guys need to understand that number one thing that's holding everybody back is your stuff is not simple enough. When you make your stuff overcomplicated, you have a hard time following it consistently every day. You don't have consistent analysis, which don't lead to consistent results. Think about it. What all do profitable traders have in common? They have a simple strategy, consistent trades. They're not emotionally driven. They have one or two entry models and reliable risk and trade management. All of things are the same. The thing why I talk about simplicity so much, because if you're not able to mirror your trades every single day, if you're not able to consistently analyze the markets in the same way, then you're not going to get consistent results. And the thing that ties all those things together is profitable trading system. So profitable trading is not just about profitable trading strategy. That's where a lot of people get mistaken. Profitable trading system is three things: strategy, risk management, and trade management. And in this video, I want to talk and go more in depth about this strategy part. I will break down how I trade, okay? In this step-by-step breakdown, I'll explain the trading strategy. So this is my strategy. I always start with the higher time frames to identify the bias. Now, I saw some of you in the comments, which is completely fine, that you guys are finding your bias in different ways, and that's completely fine. That's how I find my bias. That's how I get consistent results. Let's go back here. This is my trading account. You can go all the way up to April 8th. These are all my trades that I've taken since April 8th, trading live with the Hidden Edge members, okay? So I know a thing or two about trading, and I don't like to overcomplicate my stuff. I use weekly and daily charts. I look for higher highs, higher lows, lower lows, lower lows, lower highs, lower lows, and so on. If it's not clear, I check the daily. If it's not clear on the daily, I don't trade that asset for that day. Next thing, I need to find point of interest. You need to know where to enter the trade instead of guessing, because point of interest gives you a precise entry areas and keeps losers small. Point of interest is a zone where price reacted strongly, or in other words, supply or demand. You have to use between 15 to 30 minute charts to mark fresh supply or demand levels. You have to check at least, not more than 5 sessions behind. And for example, for Euro GBP, you shouldn't be looking at for zones in New York or Asia sessions, right? Only in London sessions. So how do I find POIs? It's simply, I'm looking for a liquidity accumulation before an impulsive move inside of the session. As you can see, this box represents a trading session, and inside of the trading session, it needs to be how to find these supply demands. If you want to join and trade and learn from me, watch me trade live, watch me apply these things daily, check out the link in the description. But the next step, the last step that I need, is lower time frame entry confirmation. So if you have a specific rules for your bias, specific rules for your liquidity, specific rules for your entry, you avoid random entries. You get in the best price and maximize your risk to reward ratio. I only do that between 1 to 5 minute charts. I wait for reversal pattern, liquidity sweep, Fibonacci alignment, right? So the reversal patterns are simple patterns, liquidity sweeps. You know what that is. Here's the liquidity sweeps. I have a video as well. You can check that out on my channel. I explained this entry model in detail, how to use this entry model. And then we have Fibonacci alignment. So why this strategy works is because it's repeatable, it's high risk to reward, works consistently, and it's easy to analyze this strategy consistently. It has precise entries and systematic approach. Now let's take a look at the charts. Okay, we have gold here, okay? So as we have gold, I don't know if you guys can see it. This tool at the top, you cannot see it fully, but weekly it says bullish. This tool will be available to Hidden Edge members by the end of this week. I built this 1,000 lines of code. Fucking amazing tool, helps you identify the direction of the markets and the risk to use for trade. So, like I just told you, we look at higher time frames for direction. Clearly bullish, daily clearly bullish. I don't even need to look at anything more here because everything tells me it is bullish. Okay? Oops. Okay, now, wait. Now it's good. Okay. Now I drop to 30 minutes or 15-minute time frames to identify liquidity. What do I see? I see the distribution of liquidity after the big push. What does that mean? We have a big impulsive push, a lot of bearish momentum, a lot of sellers stepping in here. And at this candle, at this specific price, we have accumulation. The price failed to break below, the price retested it, and it's again failing to break below. It's showing that there is a lot of buyers in this area. Very, very simple. So now the last thing that I need here is, I know the direction, I know that I want to buy from this point and why I'm buying from this point, and last thing I need is an entry confirmation. So I drop anywhere between 3 to 5 minute time frame. Let's say this is a 3-minute time frame. What am I seeing? I'm seeing that the price was moving lower, lower lows, lower highs. We started making higher highs, higher lows, right? So now the price has tested the level. It has shifted in the market structure to the bullish. Let me pull out a Fibonacci tool. Let's see if the Fibonacci tool will give us an entry here. Here we have the rejection of the Fibonacci tool. Stop loss, you can use this as a stop loss below the structure, below this structure or below the zone as the safest option. Let's use it somewhere in the middle, in between. Let's target 1 to 3 risk to reward. And that's how it's played out. You see how all of these things glue together. Higher time frames give us direction, lower time frames give us a point where to enter, and finally, lowest time frames give us a trigger when to enter the markets. And when you have all of these time frames working together, when you have all of these time frames aligned, it will give you the best setups possible. You don't need to overcomplicate things. You need specific time frames doing their job, have their own roles, and then having them work together. That's all you need. Once again, guys, if you want to learn all of this in more detail, watch me trade live, join an amazing community of traders. Let me show you the community. Here, looking at trader results. Rocas this morning, $1,200. So if you don't believe me, believe these people that learn from me and get, wow, this is a good trade. I think it might be even the same trade that I just showed you guys. I think it might be the same trade. I'm not sure. Wow, okay. Another dollar personal and funded account. Personal 1,000, 4,000, personal funded accounts. That's all you need to know, guys. Thank you for watching. I'll talk to you soon.